We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Chris Whalen, investment banker, author of the recently re-released second edition of Inflated, and chairman of Whalen Global Advisors. Chris, thanks for joining me today. How are you?
Good morning, Tom. Yeah, it's a beautiful day in the Hudson Valley. It's going to get cold again, be down in the 40s tonight.
Oh, wow. I guess we're still in the throes of the volatility of spring, right?
Yeah, this was a pretty normal winter. We had snow on the ground for almost 2.5 months. In the old days, it'd be like 6 months. So, yeah, but this is a beautiful spring. This is the way it ought to be. You want it cold at night.
Excellent. So, Chris, the first version of the book Inflated, Money, Debt, and the American Dream came out in 2010, and you recently re-released the second edition and rewrote part of it. So what has changed since then? What do you see as the current state of the markets?
Well, what I did with the book, just in quick terms, is I edited about 20,000 words out of it. I took the Henry Ford stuff out. There was a whole section about his role in 1933 and the banking crisis, and that's now in Ford Men. So that gave us room for another chapter at the back of the book where we talk about Ben Bernanke, Janet Yellen, and of course Jerome Powell, and how they have managed the money supply, debt, everything else in the past 15 years. We have a new introduction by David Kotok, my dear friend, who is responsible for this book. When we were fishing years ago, he walked up to me and said, "Chris, write the book." It was 2010. We had CNBC by the lake interviewing, all of these economists and everything else. And everybody was broke, by the way. The whole industry was reeling. I was working for a special servicer at that point. And, the typical mortgage-backed security was trading for 20 cents on the dollar. So, wind it forward today. Much of the market for housing is government supported. So we don't think about default cost anymore. There's a lot of volatility. And then, the Treasury market since Donald Trump took office and the tariffs and everything else has changed. We've written about this in my blog because since COVID, or really going back to 2008, when the Fed stepped on the gas, both bonds and equities would rally. They would go up in price. So we had this weird correlation, right? That's changed. I think you're going to see long-term interest rates performing counter-cyclical to equity prices. And that's something the industry, I got to tell you, has got to get used to. Both people who buy treasuries and people who finance housing have to deal with a different world now.
Mm-hmm. Well, of course, debt is one of the main issues, the main problems that many people see right now. And I want to get into that in a little bit. But, you mentioned the idea of tariffs. Do you think the markets have basically digested the current tariff plan at this point?
Not yet. They don't understand. President Trump is a very smart guy, and he's been thinking about these issues for decades. He has a plan. I got to see Art Laffer talk about this the other day, and he does really want to use the threat of tariffs to change the relationship between the U.S. and other countries. Because one of the things we talk about in the book is that running the global currency is expensive. Other countries are happy to use dollars as a means of exchange, but they don't have to bear the cost, which is running big external deficits and high inflation for your people, for consumers. Those are two really onerous costs. So what Trump is saying is we'd like to rebalance the equation. Here's the thing, though, Tom. When you talk about debt, what is debt? Debt represents demand on the part of human beings for whatever. Mm-hmm. And when societies can't, generate enough income to meet the needs of their people, what do? They inflate their currency. This is what you saw in Argentina. Mm-hmm. The big question today with President Milei, who's done amazing things to help that country change, is can they generate enough GDP to take care of their people without using inflation, especially for the lowest parts of society in terms of income? They were subsidizing everything. Mm-hmm. And he's removed all of that. It's a shock. It's a cold turkey. Mm-hmm. So, the world this is something Paul Volcker talked about a lot. The world still is not able to support all of its people with employment, with basic services. That's where the inflation comes from.
So is that basic idea of the world not being able to support its people, does that come down to the idea that we're basically borrowing from the future to be able to service and feed, clothe, and again support all of those people at this point?
Yes, but the distortion effect, of course, is war. So Great Britain was the predominant hegemon when it came to money for centuries, and they had a big navy and a big army, and they could enforce their will. After World War I, we took the baton. So the U.S. became the global reserve currency custodian, if you will. And, it allowed us to do things which other countries cannot do. So today you have $37 trillion in total debt. Is that a impossible problem to solve? No. No, I could solve this very easily. Just freeze spending. Don't let Congress just automatically raise spending 10% a year, which is what they do now. You realize Congress can't even pass a budget now. They are so dysfunctional. I think we're going to have to get rid of them, to be honest with you. I think we're going to have to go to something, a hired manager, perhaps. We'll hire Elon Musk to run it. Because what they are finding under Trump is that there's a lot of layers of stuff in the government that nobody even knows about. I just got to hear Bill Pulte talk about Fannie Mae and Freddie Mac. There were thousands of people there shuffling paper for things that were no longer relevant. You remember when the wall board was bad and everybody was worried about, contaminated board for building houses? This was like 10 years ago. They were still writing reports about that. That's incredible. I think all of the world creates excess employment because it's the human condition, right? We all want to take care of ours. My people were in Tammany Hall. We could talk about that all afternoon. So,
So, Chris, as you said, being the reserve currency of the world basically exacerbates inflation. Why is that? Is it just because of that outside demand for dollars that forces us to keep basically expanding the money supply, and that inherently drives that expansion of the money supply?
Well, think of it this way. If you have a fiat currency, which we've had since really World War II, although it was created by Abraham Lincoln, what you basically have is debt. Money is hard commodities, whether it's gold, silver, or, copper, could be anything, but it's a thing of value. On the other hand, we now have crypto tokens, which are nothing. When you have a cryptocurrency, you have an option to find a greater fool. And as long as the market stays up, the option remains. But if it doesn't, then it all just goes away. It disappears. It's an intangible asset. So, what we have with the fiat system is now a currency that's essentially debt, but with more debt on top. And that's where the U.S., I think, went a little crazy, which was, the arrogance of war. When you win and the people come home and they make babies and everything else and, catch up with what they thought they should have had and more. Remember? The greatest ever generation. We were writing books about this. But I think that Americans, unfortunately, are going to learn that we're no different than anybody else. We're big and prosperous. We do have an economy which is far more dynamic and honest than anywhere else in the world, really. I've lived in Europe, and I would never trade Europe for the United States. So, it's a special place, but we got to have some limits. And right now, the Congress is a joke. They're talking about adding $2 trillion to the deficit so they can cut our taxes. And I think they're going to raise the state and local tax exemption back up to $40,000. So, they need the revenue, but nobody talks about that. And the point of my book, by the way, is that Americans don't like to pay taxes. This goes back to the inception of the Republic. So when they became aware that they could just go out and borrow money, that's where the inflation comes from. That's why the Fed has to grow its balance sheet, because at the end of the day, you remember, in the textbooks, we talk about full employment and inflation. No. The only mandate for the Federal Reserve Board is keeping the Treasury market open. This is very clear this year. We wrote about that in the blog. They do a quarterly report on what's called the System Open Market Account. There's a manager who works at the Fed in New York. And his report this year was a little bit concerning. Let's put it that way. He described how Initially, when we had that market volatility after President Trump announced the tariffs, rates went down. We had the flight to quality. And then after a couple of days, the 10-year Treasury started going up. And everybody in the market had trades put on with the assumption that all of these rates were going to tighten in unison, and they didn't. So when you see that basis trade, that's what that's called, stopped working, right? What that tells you is that the funds who largely support the U.S. Treasury auctions are not going to be willing to take that risk again. And that's got a lot of implications. I think ultimately, I cover the banking industry. We're going to see banks essentially forced to buy more treasuries because, the Fed makes them bigger when they grow reserves. When they go out and buy securities in the market, they create deposits. That's what happens.
Right.
However, right now we're shrinking. So when the Fed balance sheet shrinks, we destroy bank deposits. That's why bank deposits have been flat for about a year.
Well, as we're talking about the debt market here, obviously we have seen possibly a dysfunctioning debt market, or at least
Yes.
a debt market that is at very least changing dramatically. And
Yes.
we're seeing that around the world, not just in the States. Japan's long-term debt is starting to really rise.
Yes.
Is that a threat right now to, let's say, worldwide bond stability at this point?
Yeah, I think it is. Unfortunately, I'm a longtime student of Japan. And I must say that for a long, long time, we just figured that their savings surplus would somehow keep their rates low, but that doesn't seem to be the case anymore. And there's some other issues. Many companies in Japan are moribund. They don't really make money. And this is why the major Japanese business groups invest offshore, consumer products, autos, whatever it is, right? I'm a longtime shareholder of Toyota. I think they're the winners in that industry, but on the other hand, the market in Japan doesn't grow, right? So if you're a company like that, Suntory, any of these big Japanese firms, you gotta look to Europe and the United States and Africa, of course, and South America to get growth. Bottom line, the Europeans have the same problem, by the way. So, the question for individuals and corporates is growth. Where do we get real growth? And what we do instead is we create new games. That's what cryptocurrencies are. It's an innovation in a sense that it's a way for people to make a living, I guess. So
Say more about a way for people to make a living. Is that kind of like just another game, another extension of what you said earlier of us taking care of our own and giving people a job kind of thing?
No, but look, when you have a society that has achieved a certain level of affluence, both with equity and debt, in other words, think of the income we generate every year, real income from GDP. And then on top of that, we'd go out and borrow a bunch of money. So the US economy in terms of growth is like a leveraged buyout. It's supercharged. And you get higher equity returns. So people who are affluent can invest in real estate, can invest in stocks, right? Or gold. All of them tend to ride the inflation up, in a sense. So the rising tide lifts all boats. Those who can't participate in the financial markets, they don't have a hedge. So they lose ground. And this is why you see progressive efforts around the country to limit rent, for example. We have a fellow here in New York City who's running on an explicit rent freeze. And, I'm now a member of the New York Mortgage Bankers Association. I had to join because we need to go up and talk to these people. And they treat the guys who own these buildings as the enemy. So over time, what do? They go to Texas and the Carolinas and Florida, and that's where they build. And today, prices in the blue states are going up because there's no supply. You don't have anybody building. I put out a comment this morning about Bill Pulte, the head of the FHFA. They take care of Fannie Mae and Freddie Mac. He's a builder, obviously. He's third generation from one of the biggest national home builders in the country. And the truth is, you can't build low-end housing anymore, on site. You're better off with a manufactured home. And he had talked to Elizabeth Warren about that. It was very funny because she had no idea. And I think, it's interesting. Members of Congress need to understand that the cost of building a house today is minimum $150,000. Minimum. Because it's, the inputs, the labor, the land. So in states that you see, mostly blue states that limit new construction and limit changes in density, the prices go up. And New York's an awful market. I live in the Hudson Valley, just outside of New York City. The volumes in this market are awful. And before COVID, if I was buying a pool of delinquent loans in the secondary market for New York, I would get a discount of 20% versus California, simply because of the laws here. It takes 3 years to do a foreclosure in New York if it's contested. So, the prices of mortgages reflect that.
Mhm.
And the same thing with the houses. The house prices were very weak, low volume. Now it's actually changed. I think inflation has put a premium on houses, that are at least below the conforming limit, which is about 1,000,001 in New York. New York's a high price state. So for consumers, that's tough.
Mhm.
You got to come up with $200,000 down payment if you want a conventional. That's the reality. I have a relatively small starter house that was built in the 70s. We should be building manufactured houses like mine. It's a rectangle, perfectly easy to take care of. And yet to build this house today, my God, be probably 300 plus $350,000.
Mhm.
So,
Well, obviously that reflects a degradation in the value of the currency, right? But also
yes, that's right.
the inflation of the cost to actually be able to make that happen tangibly, right?
Yeah, if you track the size of the Fed's balance sheet, with many economists ignore, by the way, they sit there and spend hours talking about the target for Fed funds instead of looking at the whole yield curve for treasuries
Mhm.
and then obviously the size of the Fed's balance sheet, because that immediately affects banks. And when banks are bigger, they look for stuff to do with the money. I will tell you, though, that the ones I cover the top 100, we published an index on it, have excess capital. They would like to basically have higher share buybacks and just give it back to their shareholders
Mhm.
because they don't have a use for it. That's a rather striking thing. So the size increase that the Fed causes among banks by growing deposits, right, doesn't really end up in useful credit for the economy. It's bloat. It's like, somebody taking prednisone and
Mhm.
getting all puffy. I'm serious. My dad had to take it, so I'm very familiar.
Mhm. Chris, I want to go back to something that you were saying about getting the national debt under control. How, you said basically to just freeze the expansion of spending, but with the
Hmm.
expansion of entitlements, is that kind of a double-edged sword? Like, is that an actual feasible idea to be able to implement?
Well, it is depending on how society looks at entitlements. If you go to Europe, the safety net they provide is basically for the very end of your life.
Mhm.
You're expected to work until you drop over. So, for me, when you look at the US system, the safety net that we provide for our parents and for various other constituencies in the US is extremely expensive. Trump is going to cut this back and basically say to the states, I'm going to give you X amount of money a year, and then you have to figure out what to do.
Mhm.
So, what I think we need to do at the federal level is start to prioritize all of our programs and start to trim the ones at the bottom. Now, the congressmen are not going to want to do that, but I think it's the only way we can get a rational grip on things. I would freeze outlays for a few years and just let the economy grow. It grows considerably every year, right? And then the third piece is you have to give the president what Ronald Reagan asked for, which is a line item veto. You tell the Congress, prioritize what you want, tell us what your people want, and also what they don't want.
Mhm.
What things are not working that we don't need to do anymore, right? And if you gave the office management budget and the White House, the professional staff I'm talking about, the ability to reprogram aggressively, I think you'd save a lot of money
Mhm.
and you would probably get better services provided to our people. So it's not like we can't do this. Even I'll give you an example. All the stuff with Elon Musk and DOGE and cost cutting. There was a kind of a rationale there because the federal government is still operating 30 years ago in terms of systems and controls. They have no idea what they're doing. They have no idea what they own.
Mhm.
The federal government owns a lot of stuff. And when stuff goes bad, like remember they helped General Motors and AIG, that was the treasury. The treasury owned that. They have
Mhm.
this thing called the Federal Financing Bank that owns all this stuff. So when a Ginnie Mae lender goes bad, The servicing portfolio goes to the Treasury. When veterans get their loans modified, they had a program for that that just ended. The Treasury ends up owning a 3% mortgage for the soldier.
Mhm.
So you know what I'm saying? If we rationalize how the government manages its balance sheet, how it does things in terms of expenditures, we can save a ton of money. It's just a matter of I think partly expenditure, getting the resources you need to do it, and also getting Congress to focus on this, because the trouble is they don't oversee anything and they can't even pass budgets anymore. So there's a dysfunction there in terms of the governance of the country that's got to be addressed one way or another. And if Congress doesn't want to do it, then they have to give the executive the ability to reprogram and even cut, and then come back to Congress and say, look, we're going to cut this. Are you unhappy? And if Congress says they don't want to cut it, then fine. But you know what I'm saying? It's the way any organization is run, except for our government. So, it's just, again, Americans got very sloppy, I think, over the past few decades.
Mhm.
And there are a lot of Republicans and Democrats in Washington that are happy to see people looking at these things. Like how many dead people do we have on the Social Security rolls and things like that. The systems used by Treasury for payments are so old, they almost couldn't find out what was going on. We're talking about COBOL computing from when I was a kid. I remember when there was no internet, okay? I
Mhm.
grew up with a pencil. So when I started getting into computers, it was, the Stone Age. That's what the government still uses today.
Mhm.
In fact,
Well,
Microsoft just cut them off a few years ago and said, no, you have to come to the cloud now. They were running Windows XT. And the other one, no, NT, excuse me. They had a government version of NT that had been dumbed down and secured
mhm.
so that it ran reasonably well, but it was 30 years old.
Well,
So, if you want to manage something efficiently in this day and age, you have to have good systems and you have to pay for that. The federal government's woefully underfunded. I work with Ginnie Mae, for example, really great people, but they don't have the resources they should have because they make money. That agency ought to be independent. They make money for the Treasury every year
Mhm.
and rarely lose money. So,
Well, I don't think anybody can say that being more efficient and you know actually getting spending and efficiency up, or spending under control, efficiency up, really optimizing the systems, nobody can say that's going to be a bad thing. Getting rid of
mhm.
the excesses of a system or a program like the USAID, overspending and that
Yeah,
debacle.
but again,
But
when you don't have systems, you can have fun and games. And what
fair.
we've seen over and over again, you see this in housing, you see this at AID, like you were saying,
Mhm.
is that there was a lot of money going places it should have been going.
Absolutely. But my broader point with that is it seems like the cuts that Doge ended up making end up, in the grand scheme of things, being a little bit of a drop in the bucket compared to
Oh
something
yeah.
like, let's say, the interest expense alone on the debt.
Oh yeah, no, the stuff they found was
Mhm.
relatively trivial. The systemic changes they identify and the improvements to how they run these systems will yield much more.
Mhm.
And frankly, if they end up with a 10% tariff across the board, that
Yep.
will generate a lot of money because it's a big economy.
Mhm.
So, it's the medium to long term things. I think you're absolutely right that matter. But at the same time, I think we have to recognize that our political system has become totally dysfunctional when it comes to management and oversight. We
Mhm.
have agencies in the government that are already there that can do this. You'll notice that some of the more conservative and focused members of the Trump administration, where are they working? Office of Management and Budget. Because Treasury, OMB, and then the General Services Administration, which runs the physical assets of the federal government, those are the three key agencies. They run the place, particularly Treasury.
Mhm. Chris, with the amount of debt that needs to be rolled over in the next 2 years, does this mean just basically more capital is needed to be allocated to interest expense rather than productive capacities within the economy?
Yes. Yeah, this is the classical concept of crowding out that the neo-Keynesian economists pretended was irrelevant. And now we find out, sure enough, that it is relevant because, to your point, if you don't have that capital available for productive investment and therefore push the cost overall down, if you're just using it for debt service on stuff that was provided 5, 10, 15 years ago, we're just financing actions of government that go back years. Think of it. We're financing stuff that probably happened 30 years ago. So my point is that's not productive at all. But you see this across the industrial countries. If you look at all of them, they have large bodies of debt that they can't really pay off during that second Minsky stage. You go from paying off your debt, principal and interest, to just interest, and then eventually you get to the tertiary stage where you default. So the U.S. is kind of in the middle right now. We have huge assets, so it's not like we're insolvent, and we could fix this. I look at the debt as a demographic problem primarily, and I think what we just have to do is tighten things up a bit and run it better, and this country will grow its way out of the problem. The thing is, getting much more than 3% GDP growth, Steve Moore and the Wall Street Journal have been arguing about this recently, is hard. Especially if it's all private sector, because government is the sector that grew under Joe Biden. That was probably the highest growth part of the economy. And then you have the Fed pumping the liquidity into this thing. So it's been a really strange few years, let's put it that way. When you saw the Fed have to issue what they call reverse repurchase agreements, which is essentially a T-bill issued by the Federal Reserve, that told you they went too far. Remember that great movie Fantasia with Mickey Mouse, the Wizard's Apprentice, and he gets the water all over the floor? Well, that's what the Fed was doing. They were trying to soak up all this liquidity because these money market funds were, and several banks too, were really threatened by the fact that rates were zero. There was no carry in the system. That's a big problem. They still worry more about deflation at the Fed than they do about inflation. And that's, again, because of the debt. We have a mess, by the way, going on in private equity. Paul Atkins is a good friend of mine. He's about to become SEC chairman again. And they want to open up the private markets to retail investors. So I think that's a really bad idea. There's going to be a lot of litigation with some of these credit managers and the insurance companies that bought this stuff because they fund annuities and pensions with this. And it's real crap. I'm telling you, a lot of companies that were created during COVID and financed with really low interest rates are just unviable today. And you see the same thing in the property market. We have reasonably nice rental buildings in New York City that are fully let, and they still can't work because of the debt they have. So what's going to happen is the equity in that building is going to get wiped out. The debt, the creditors are going to roll into the equity, and they'll restructure the company. It's a good asset with a bad balance sheet, so they'll fix it. But this is going on in the background. You don't hear about it a lot because these are institutional markets, but the restructuring of commercial real estate in America is destroying hundreds of billions of dollars in value, simply because the use case for the building has changed. They don't need it anymore. New York City is a great example. The showcase buildings are still trading at top prices, but when you go downtown, you have block after block that nobody needs. We need another Robert Moses to come in here and reimagine the city. But I don't think that's going to happen.
Chris, it's funny that you used the example of Fantasia, and I've thought about it and explained it a little bit differently, is that we need buckets of different assets to soak up some of the liquidity that the Fed was kind of spewing out. But
no, that's true, and we weren't creating them. The IPO market was quiet. The debt market continues to grow, but it's really offshore. When we were talking before about the dollar and its global role, countries can finance stuff in dollars reasonably cheaply. They can use treasury debt as collateral in these swaps. The Chinese do this a lot. And then they can move it into another currency if they want. But, the dollar is still 80% of one side or another of every currency transaction in the world. There's really nothing, there's nowhere to go. Imagine if you were trading oil. Where could you go other than dollars? Well, you could go to yen, maybe euros, and that's it. All the other countries are going to tell you to go away. Like if you tried to trade Swiss francs big in commodities, they tell you to go away. Because they don't want to import the inflation of having their currency grow to accommodate you. So the dollar is still a default because it's so bloody big.
Mhm.
Large banks can do enormous transactions, no problem. And the rest of the world's happy to use our money if they don't have to pay for it. I don't know if Donald Trump's going to ask them to pay for it. That could come.
Well, Chris, when we think about these grand changes that Trump has basically on the table, in a lot of ways, it's returning America to how it used to function many years ago by being less interventionist around the world, lowering taxes
Yes.
domestically, and funding more of the government based on this, possible 10%, as you said, tariff.
Mm.
So do you see this as a reasonable strategy to return to, considering the current state of the world and the interconnectedness, the globalism that we have ended up at? Like, is this a giant rug pull to return to a system that is maybe a little bit of an archaic framework of how the world used to work?
Well, the world worked on gold even through World War II. When FDR seized gold in 1933,
Mhm.
he still had to pay attention to it because there was a legal gearing ratio between the amount of paper that the Treasury issued and the amount of gold they had. So that's why they grabbed it.
Mhm.
Um, since then, the whole world was on this fiat system that said we're going to use the dollar as the benchmark, and all the rest of you have to behave in
Mhm.
terms of the percent of debt to GDP and all these kinds of measures. And we're going to have the World Bank and the IMF here to help countries with balance of payments problems. So they thought at the time that it was really only about managing balance of payments. You wind the clock forward to today, we see that it also involves inflation. So that these nations that have big public debt on top of fiat currencies, right, really have a problem because over time it accumulates and they never repay it. So they have to try and inflate it away. It's just, this system has a bias towards inflation.
Mhm.
So, for example, the Fed, I think, 12 years ago, decided 2% inflation equaled price stability, right? Well, I could argue that the commercial real estate market would not work at all unless we at least have 2% inflation every year.
Mhm.
Because for 75 years, people were taking money out every time they refinanced a commercial building. Think about that. It was a source of cash. How do you think Donald Trump and all the other guys from Queens who used to build modest apartment buildings ended up building stuff in Manhattan? It's because the equity went up and up and up. So now we're in a different place, and that asset class has got a big question mark over it. Multifamily is the new subprime, by the way. What Trump and his colleagues are finding when they look inside a HUD and the GSEs, Fannie and Freddie, is that there's a lot of marginal multifamily real estate that's been financed by the government. Why? Because consumers' income is flat. The cost of running the buildings isn't flat. It goes up
Of
every
course,
year,
yeah.
right?
Mhm.
And remember, we did nothing for landlords during COVID. They got stiffed for 2 years worth of rent.
Mhm.
Nobody thought about that. So that changed the industry dramatically for smaller rent stabilized properties in New York City, Chicago, some of the other blue cities. It's gotten to be market. They can't be financed by a bank.
Mhm.
So it's either hard money or they end up, hat in hand going to HUD. So I think you're going to read and hear a lot more about multifamily real estate in the next several years. I would be very, very careful about investing in any of those assets. Down south is different, but we have overbuilding down south.
Mhm.
You see it all around. And by the way, Florida, I think residential housing is already broken. It's starting to fall pretty rapidly.
Mhm. Chris, I want to go back to talking a little bit about gold and especially the Nixon era. In the book, you mentioned your family's history during that time. Do you think that there's more significance of Nixon taking the dollar off the gold standard? And in some ways, do you think this is also somewhat responsible for taking it out of public consciousness as well?
Look, I view Nixon's act as kind of the last um, symbolic withdrawal or break with gold. I think Roosevelt's devaluation and seizure of gold and the legal changes that Congress enacted turned it into a collectible. It was no longer a monetary asset.
Mhm.
But you can see now that that's about to change. July 1st, the Basel regulatory people in Europe are going to allow gold to be counted as a liquid asset if it's in the vault. That's a big deal.
Mhm.
So I think you're going to see gold, and it's been happening for a while now since the creation of the Shanghai Exchange, really coming back as an alternative to dollars as a reserve asset. And the way you can see this is that the central banks are basically buying X amount of tonnage and they are price indifferent. So what that says to you is that they have decided that they have to diversify away from dollars, and they're also going to hold the currencies of their neighbors or trading partners, that sort of thing. And to me, that's a healthy development. If the U.S. could get down to below half of total global foreign exchange transactions, I think that would be a good thing. It would force the Congress to sober up a little bit.
Would that have the added effect of not adding to the money supply as well?
Yeah, it really depends on debt issuance.
Okay.
If you have a situation where the government is always in deficit, the Fed has to grow the money supply in cadence.
Mhm.
They have no choice. They can't just say, no, we're not going to do that because then the market would become dysfunctional. Since 2008, let me wind the clock a second. In the book, I pay homage to a lot of researchers that came out with great stuff between 2010 and today.
Mhm.
And one of them was a pair of writers, Lev Menand and Josh Younger. Josh Younger works at the Fed of New York. And they wrote a piece, long paper for the Columbia Law School about the legal basis of the Treasury market. And you might think, okay, what's this about? Well, the reality is the Treasury market was largely created by the Federal Reserve Board after World War II. They wanted to get their independence back. They had kept interest rates very low throughout the war. They had subsidized the government's debt issuance. So when they created the primary dealers that we all grew up with as kids, right? That was a buffer, if you will. And how did dealers finance themselves? They would do repurchase agreements with treasuries overnight. You could finance them with a bank because it was a risk-free asset. So wind the clock forward in 2008, we annihilate most of the primary dealers. Most of those independent brokerage houses had to get bought by banks. And then in 2020, with COVID, again, the whole treasury market got annihilated for over a month and a half. The Fed came in and bought the whole thing. So when you look at that, we have a structural issue, and yet the Congress is happily adding to the debt pile.
Mhm.
I'm sure privately hear about this, but publicly, you rarely hear a politician talking about how we may one day be forced to cut spending. They don't even imagine that. So that's kind of where we are. We're in Never Never Land. Our political class still thinks that they can do whatever they want. And until that changes, I think, there's not going to be much change in monetary policy because, they can't. They have been kind of sort of shrinking the Fed balance sheet, mostly treasury bills, which run off fast. But you'll notice the mortgage-backed securities still almost $3 trillion that the Fed bought are not going anywhere.
Mhm.
The average coupon on those securities is probably well below 3. So think about that. When are those mortgages going to prepay? Well, when the owner decides to move.
Mhm.
Although I will tell you something, 60% of the payoffs in the industry today are people who are moving and not buying another house. And what that tells you is this cost of ownership is forcing them out of the
Mhm.
market into a rental, or they just, change a life. You never really know. But that's a much higher number than it used to be. Payoffs used to be 20% or less.
Mhm.
So when you see a number well over half, I think part of that is inflation. Just the cost of home ownership has gone up a lot.
Yeah, that makes sense to me. Chris, the book lays out a path to really how we got here today through a historical accounting of many of past presidents and their economic, fiscal, and monetary policies. But as you did this research, did you get a sense of, let's say, types of governments and what their net effect ended up being for the outcome of the country? Is this not necessarily split between, let's say, Democrat or Republican, because I think that's changed a lot over time, but let's say more interventionist versus less, or is there a better way to think about the the distinction between administrations and their net effect on the country?
Well, I think as a general observation, you'd have to say the Democratic Party has gone much more to the left, to a kind of a European socialist model that panders to consumers. Why? Because they're under pressure due to inflation.
Mhm.
So, from a political perspective, selling them salvation with an activist progressive government works at the polls, at least for now. It's hard to sell a conservative message. On the other hand, Jack Kennedy was a supply sider. He cut taxes. I worked for a supply sider named Jack Kemp, congressman from Buffalo, a happy conservative who knew how to sell these types of ideas. But I think that as a general matter, both parties have become more statist and more government focused. I remember my dad years ago, we were at a markup on Capitol Hill for the budget. This is a long time ago. And my dad said, look, the Republicans don't want to kill the welfare state. They just want to run it better. I thought, well, yeah. So, Trump represents a very different situation, I think, because he wants to return America back to kind of pre-World War One, if you think of it. He would like the country to be less engaged, less at risk, and frankly, not have to carry this huge military. The thing I love about Trump is that he's against the endless war. When you saw Victoria Nuland and all of these neocons who would work for W, all of a sudden working for Joe Biden, that told you all you needed to know. These people helped to foster the war with Ukraine and Russia by telling the Ukraine they could join NATO, which is crazy. If you know the history of Europe and how we dealt with Austria after World War II, they joined the EU, but they, became neutral. And look at a map. Do you think the Russians would ever accept the idea of a NATO member Ukraine? It's not going to happen.
Mhm.
So anyway, we caused this war, and to his credit, Donald Trump is trying to end it. Because ultimately, I think we don't really have many reasons to fight with the Russians. We have more in common with them, and they have more in common with Europe than we do with our friends in China, who have this modern mercantilist model. It's like Great Britain on steroids with AI, okay? And they have an imbalance in their model because it's export driven. If they can't sell stuff to the rest of the world and have a surplus with the rest of the world, China doesn't work.
Mhm.
So it's a big problem for the Communist Party in China. I read Chinese history as an undergrad, so I love following the country. But I gotta say, I think there's going to be change there. I think a democratic, open China, or even a China still under Communist Party rule that is more like the regime before Xi Jinping, would be far more productive. They would be an extraordinary market if they continued to open. Unfortunately, Xi is very typical, and he has imposed a very oppressive regime, cult of personality built around him. And he has the usual political minions making political and economic decisions, and that never comes out well.
Mhm.
Look at the property sector in China, the most grotesque misallocation of economic resources you could ever see. But they wanted to employ labor. That was their objective. Belt and Road is about sending workers to Africa and they don't come home. Same thing. So again, we were talking before about can we generate enough income to take care of our people? In China, the answer is no.
Mhm.
They can't produce enough food and they can't produce enough economic opportunity to fully employ their people. And that's a concern because everything there is about security. They don't care about anything else.
Well, and you would think with the demographic issues that they're facing that they wouldn't necessarily want to be sending workers, as you said, to Africa, not to come
Yeah,
home.
well, that's a very good point. We'll see. We will see. The numbers are still large. China wants to basically have a symmetry in Asia. They want to be able to bully their neighbors.
Mhm.
And that's why there's still a threat of conflict with the United States. Obviously, I don't think we're gonna abandon Japan and Australia.
Chris, we talked about leaving the gold standard, and we're now in this era of basically modern monetary theory and cryptocurrencies as well. How do these fit into America's debt-driven economy, and are they solutions or symptoms of a deeper issue?
I think they're symptoms. Crypto, particularly Bitcoin, is fascinating, just the
Mhm.
way it emerged. Nobody had to market Bitcoin. They just put this little game out there, and the cryptography community, the technical community found it first, and it grew. The other coins, I think, were just imitation, if you will, and all too often they become a vehicle for fraud and theft, really. I don't see a role for stable coins because that's what the dollar is. The dollar was the first cryptocurrency. I wrote a piece for the Daily Reckoning about this, and everybody was fascinated. They had never heard this before, and I said, "Look, it's Abraham Lincoln. This is how he financed the Civil War." Because think about it, when he issued those green pieces of paper in 1865, people were horrified.
Mhm.
Money was gold or even foreign currency. People still used English and Dutch money in the US in those days. We didn't have enough money. The country was growing extremely fast, right? So today we have a lack of opportunity. The crypto phase to me is just another con. I work in the securities business, so I can't even touch coins because I would become a compliance problem. When you're FINRA registered, you don't do that. So I think that to me, it's an interesting phenomenon, but you're absolutely right. The MMT argument is the dollar. We talk about this in the book. I have a great passage in there by my friend Joe Costello, who's a brilliant political analyst. And he said, "But I got it now. You're trying to sell me MMT, but that's what we have now." And he's right. The dollar, I think, is going to have to compete with other currencies, and it's going to have to compete with hard assets again, because let's face it, in the past year and a half, but particularly since Donald Trump has come into office, we have seen an uptick in the people who are taking actual delivery of gold in the global market instead of just netting out their position in dollars.
Mhm.
They used to just trade it for price and profit in dollars,
Mhm.
but now they're taking delivery. And the market in the US is quite tight. There's not that much gold above ground in the big form, the largest bars. In Asia, you notice they have 1 kilo bars. That's become very popular, and I think that's going to be the wave of the future. I tell my readers, I think you should have gold in your portfolio. I own a gold ETF. I have two portfolios, one for my bank strategy, and then I have a general one, which is basically treasuries, gold, and S&Ps. So the 20-30% that's in the last two, right, is the alpha, and the rest of it is just, sitting there. But to me, you have to be focused on the macro market. So
Mhm.
gold obviously has had an amazing run since 2015, but particularly the last 24 months. But I'm still in. If it trades off, I'll buy more.
Mhm.
I think it's a long-term holding. You have to appreciate the historical juncture we've been talking about. And the US, for a lot of reasons, our role is going to become relatively smaller as the rest of the world grows. But I still think we're going to remain the most dynamic economy in the world, simply because we still have confidentiality for investment. That's where currencies really thrive. Do you have a marketplace where people can operate and not have the government steal their money? Because let's face it, are you going to put your money in China or Russia? No. You have
Well,
no state.
I was going to say maybe Russia learned that lesson a difficult way at the beginning of the
Yeah.
conflict.
But the Russians could back their currency with gold and hard commodities tomorrow,
Mhm.
100%. Would it help them? I don't know. It might bring their interest rates down a lot. Their rates are quite high for their
Mhm.
short-term purposes, but they don't have much debt.
Mhm.
There's not much leverage in Russia. It's mostly just a long position in physical commodities, not much in the way of transformational businesses to provide products. So that's always the rub. My wife is from Uruguay. Uruguay is basically an agricultural economy,
Mhm.
and they can buy stuff duty free within Mercosur. So they have access to a lot of consumer products, but anything in dollars, especially imports from the US or Europe, very expensive.
Mhm.
Very expensive. Now, incidentally, most of these countries, their people are indexed in dollars. Will they maybe be
Right.
indexed in gold in the future? It's interesting, and I think it's more than 10 states in the US now, you can use contracts that require payment in gold. So I think you're going to see that come back too. Silver, ironically, silver is consumed. We actually use it in a lot of industrial processes, so it does disappear. And who knows, it may have a renaissance. We tell the sad tale of silver in the book. It's pretty funny. We almost bankrupted the U.S. government. They were issuing silver coins, and people would immediately exchange them for gold.
Right.
That was just a prejudice of the time.
Mhm.
Today, as you said, I think a lot of the public perception of gold has changed, but I also think it's going to come back the other way.
Mhm.
Would I
Well,
rather own gold or crypto? I'd rather own gold.
well, of course, but
But remember, a thing people forget, if you have big time gold, like if you're an institutional investor or something, and you have it in the vault, you can borrow against it.
mhm,
They'll lend you 90% against the gold on a Lombard loan.
mhm. I was going to
And
say,
then you,
I'm sure there's a lot of listeners of the show that want to see that reemergence of silver as a very valued and more more demanded asset class.
well, historically, in the 1800s, early 1900s, the world went away from silver.
Mhm.
And the reason was it was just too available. The price kept falling in relative terms to gold. So in Asia, in Europe, and we talk about this at some length in the book, they just said, no, we don't. And people from the US would come over there and talk about silver, and they would say, no, get out of here. So what's changed is since the war and really since the middle of the last century, the industrial use of silver essentially takes it out of supply.
Mhm.
And I have some friends who trade that market who are waiting for it to tighten up even further. So, there may be salvation out there for all of those who love silver. We'll
Mhm.
see. They could use it for coinage too. I think my hope is that Trump or maybe a future president is going to start issuing gold coins again. And it could do silver as well and let them trade by weight.
Mhm.
Don't put a monetary value on them. Just put them out in a certain size, and Treasury should publish a price where they will purchase them every day. I think it would help teach people that there is an alternative valuation, and they could even collect it.
Mhm.
In China, you can open a bank account with as little as 1 gram of gold or silver. They encourage it, even though obviously the communist system, they're not necessarily going to want to see that grow too much.
Mhm. Chris, I just want to go back and touch on something that you mentioned about seeing no real use for stable coins. They have become seemingly an important, let's say, channel of demand for treasuries. Do you see that as an overall negative for the market,
Mhm.
particularly if they provide more liquidity and demand into the treasury market?
Well, what's happening is that if you run a stable coin scheme, right, you have a non-bank company that is running stable coins. In most states, you're obliged to put up collateral to make sure that you can give people their money back and you use treasuries.
Mhm.
You could use Ginnie Maes, those have more price risk. But the point is, sure, does it cause collateral to be in greater demand? I guess so. I just don't understand what the benefit is. How does my going from legal tender dollars to a non-legal tender vehicle like a stable coin help me unless there's a price angle? The thing with Bitcoin that kind of mitigates against using it as a means of exchange is that it moves around a lot.
Mhm.
It's a speculative vehicle, even though it was originally envisioned as being a alternative to dollars for exchanges, right? It's become a price vehicle. So whether you talk about Ether or Bitcoin, any of these quote unquote coins, essentially people trade it. It's almost like a currency market. And I think that's fine, but you certainly don't want to have, funds that you need for reserves, for a charity or an endowment or something in a vehicle like that because, ultimately it's a private intangible asset that can totally lose value overnight. If people decide they don't want it anymore, the market disappears and that's it. You got nothing.
Mhm.
I was just preparing a taxonomy for my website for bank analytics terms. And when I got to crypto, I had some fun because, in the world of finance, an asset is an asset, right? Whether
Mhm.
it's a financial asset. But with crypto, all you have is the ability to sell it to somebody else. That's it. There's no intrinsic value to it, unlike gold. So, for example, if I have a contract that says, well, you got to pay me in gold next year by amount, that's a very different proposition. And
Mhm.
that's why when the state banks were the only banks we had in this country, they would have to have gold in the vault and they could issue debt, which we called money. Those notes were used for exchange. The fiat dollar is no different. So, again, when the MMT guys come around, I say, look, I've already got that. You got to give me something new. Mm-hmm. Anyway.
Excellent. Chris, is there anything as we wrap up here that you'd like to leave our listeners to think about before we do?
Well, I hope they take away from this discussion that the outlook is not grim. The outlook is actually quite bright. Unfortunately, as we say in the beginning of the book, the Hayek quote, which has not lost any of its validity, it's really hard to have sound money in a democracy. The demands from the progressive side of the equation always exceed revenue. And the only way you can meet them, especially in times like COVID, right, is to print money, which is what they did. Now, in many respects, that was helpful. But on the other hand, it had a huge cost because now the price of a home has gone up by half, and many people can't afford to have a home of their own anymore, which I think politically as well as economically is tough. So, unfortunately, inflation is the rule, and you've got to defend yourself against that. 2% inflation, the Fed's target, will take away half of your value over 20 years. Mm-hmm. So if you think of it that way, when you manage your investments, think of always having inflation in the back of your mind and how that investment can help you stay ahead of it. Because it's only those people in the U.S. who think of it that way, invest in real estate opportunistically, invest in other assets like gold, that I think are going to be able to survive over the long term.
Mm-hmm. Excellent. So for those that wanted to check out the book, again, that's the name of it is Inflated, Money, Debt, and the American Dream. Of course, it's available on Amazon, but I think you were saying something about suggesting it better at Barnes and Noble, right?
Oh yeah, Barnes and Noble's doing better so far. I think Amazon is working hard though. They have a different fulfillment channel for books than they do for soap and shampoo. Let's put it that way.
And of course, for anybody that wants to check out more from Chris, he's available at rcwhalen.com. Same kind of handle on X at rcwhalen, and of course LinkedIn as well. Chris, thanks so much for your time today. Really appreciate the conversation.
Thank you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.